is Paul Donovan from UBS's Global Economics Department. Some good news for the markets. Like a medieval monarch, the Federal Reserve has once again been distributing largesse to the deserving. It also gave some largesse to the Australians. An additional $30 billion swap facility has been put in place with the Australian and Nordic central banks to try and ease the situation in dollar funding. The Bank of Japan offered its first chunk of dollars to locals today, with the results of the bidding due tomorrow. Faced with increased stress in the money markets and a Congress that seems to be dragging out the inevitable, the Fed has little choice but to proffer liquidity to the rest of the world. Bear in mind that this is money supply going to meet money demand. It is anti-deflationary, one hopes, rather than inflationary. Meanwhile, members of Congress have not so much been fiddling while the markets burn as tentatively starting their first violin lessons in order to accompany the bonfire of the vanities that is the global financial system. The best we can say is that everyone agrees on the need for a bailout, and everyone agrees that it needs to be done quickly. Thereafter, agreement descends into farce with counter-proposals from Congressman Frank and Senator Dodd, neither of which is likely to be passed in its current vague form. Out in the middle of the flames, Goldman Sachs have announced capital raising from Warren Buffett to the tune of around $5 billion, with market talk that Sumitomo Mitsui are also going to be handing over some cash to the bank. Comrade Bernanke and his beard are dragged up before Congress again today. One might think that the chairman of the People's Federal Reserve would have better things to do with his time than answer impertinent questions from congressional members, but he's obliged to put in an appearance. The sanctity of money market funds have also been called into question again, despite a government insurance scheme, which is not contingent on the tortured processes of Congress. The credit rating agency Moody's have cut ratings from 10 funds of the Reserve Management Company on fears about attempts to suspend fund redemption. In Japan, Azo was elected Prime Minister with the prospect of fiscal stimulus being mooted. However, there may well be a snap general election called if there is an improvement in the government's popularity in the meantime. The Ministry of Finance business survey did show some improvement in third quarter confidence, but it remains resolutely in negative territory, with profits seen falling. This seems consistent with our Japan team's view of a mild recession and a weak recovery. Capital spending fails to support growth in the coming year. In the United States, the ABC Consumer Comfort Index stayed steady at minus 41. The good news was the falling cost of filling up the sports utility vehicle, making driving easier and reducing the pressure on Americans to walk any distance further than that from their front door to their car. That, of course, is a huge boost to consumer sentiment. On the other hand, the gaping hole that is the financial system worked against sentiment, and the two forces basically cancelled each other out. Existing home sales are due today, a day after the second biggest home builder in the States warned of increased supply via foreclosure, weaker credit, and cut its prices to try and sell inventory, alongside a 50% drop in sales and a 40% drop in new orders. Germany offers business sentiment from IFO for September down seems to be a good bet, especially in the wake of earlier weakness in the purchasing managers' indices in Europe. We're looking for 93.3 after 94.8. That's below the official consensus. That's all for today.